Right now, you guys already know the few things we, um, you know, got into today. I think we got into one, two, three swings. It was almost four, by the way, and I'll get into the other swings I was looking at. So first one, was Shopify. I'll tell you very simply why I got into this. We all know that Shopify reported their earnings, I believe, 2 days before. Did an amazing on the top and bottom line, and the one thing that I always look at is the revenue part of the company's earnings report. So it did really well in revenue, and if we go out to the weekly here, you could see that the previous highs all the way back in 2021, 2022 are all the way up at 171, and the resistances, or the previous resistances, was right over here at, let's just say, 127.19. So we are right now, let me delete this level right here. We are right now testing that level and attempting to break out above. And when that happens, you're looking at a potential short squeeze, right? Because this is where shorts would be and stuff like that. So I see Shopify running from 150 all the way to 160 eventually. And I mean, if you guys look at this 30-minute, you could even zoom down to the 15-minute. I mean, that is a beautiful bull flag we had, and we broke out of it near close. One of the benefits of waiting near close is just seeing what kind of fizzles out. And we broke out of that bull flag. We closed above 127.19 very strongly. So it's something definitely that one of my favorite swings that I took out of the three. Tying into the other swings that I took, I did want to briefly talk about the upcoming. So tomorrow we have
Retail sales.
yeah, we have retail sales. Yeah, that's pretty much the important part. All right, the next one is SMH. This is the VanEck Semiconductor ETF. Kind of overlooks the semiconductor stocks such as like Nvidia, TSM, so on and so forth. The reason I got into this was actually it was brought up by somebody, and they told me to look at it, and I looked at it, and I just love the setup on 30-minute, because what you have here is a ascending triangle essentially into a possible gap fill. So you guys can see the gap fill ranges all the way, like from the current price of 251 all the way to 260. Is it going to go gap up to there? No, absolutely not. But we could possibly catch some of this run into the upside. So that's the reason why I got into SMH calls. If we go to Google, which was the last swing I took, this is very simple. If you go to daily, you'll see how much of a beautiful close this was. Wherever you have your level, you have the previous day close previous day candle bouncing off of 182.02, which was a previous high. So the fact that I held that was a confirmed support, makes this a confirmed support, and we have a beautiful candle on the daily. Now, if we zoom into let's say the 2 hour, you see that there was a mini trend line that I was holding. All right, I could draw it even a little better, but you can see there's a mini trend line, and then today we finally broke above it after, the whole chop we were dealing with from 11:30 all the way to like 1:30 p.m. Eastern. So we finally broke above it. This thing can eventually test 190. So that's the reason why I took those calls. A few things I was looking at that I didn't unfortunately get into. One of them was CRM. It was an okay setup. It wasn't the best because I didn't fully like the 30-minute close, but this is a really nice daily chart. You have a double bottom with two nice bullish candles. Two nice bullish candles usually are followed by a third. So, CRM looks great. Did not get time to get into that.
Good
Another
thing we
one.
didn't get into that, by the way, because Palo Alto reported earnings, and even though they beat, they ticked down. So,
Oh, okay. Yeah, I didn't even actually pay attention to that. So I'm glad you brought that up. Citigroup. If you guys actually looked at any of the bank stocks today, they were actually primed for a decent possible run up into tomorrow. You could see there's a trend line to break here in Citigroup. Fortunately, didn't get into it, but it was a great setup to look at. The next one was, there's actually two I really wish I got into. This is ASML. The ASML chart just looks amazing here. I mean, the daily, like, I've been talking about this. I think I talked about it like 4 weeks ago. This thing is just completely, it's completely hitting all the levels that I wanted to hit, and now it's possibly gapping up all the way to eventually 820 and 840. So if ASML does for some reason gap down tomorrow, or it's just at break even, this might be something you want to potentially keep an eye out on, because it has a really great setup on the daily, on the 2 hour, on the 30 minute, whatever time frame you want to look at. Snow was another one. If you guys remember, I talked about this last time. There was a cup and handle, broke out of that, and then eventually came down, retest the cup and the handle of the cup and handle, and it bounced off that. And now this is technically a breakout, right? So we're looking at a possible gap up to 200, and then moving on further from that. Snow, if you look at the daily, I mean, this is a beautiful chart. I've bought shares. I've talked about why I bought shares. The distance this can go is pretty far, right? If I quickly draw out a fib extension right over here, let's just draw this one. You could see the targets are all the way up to 232, because you already are brushing on 192. 202 should be theoretically easy to hit. So the next one you're looking at is 232. And tying into what like Ray Pitts was talking about earlier, there's a possible recession and stuff like that. But if snow is volatile enough and strong enough, you could actually see it eventually testing 281 before any possible huge pullback. So snow is definitely something you want to keep an eye on. I still have shares. I'm up a very decent amount. And yeah, and then the last one, which I actually really wish I got into, was IBM. You guys obviously
Oh
remember.
yeah,
Yeah,
that's so nice.
IBM, you guys obviously remember the earnings trade, went ballistic, 350%. Eventually, that went up even more, 800% actually. This 30-minute chart just looks too beautiful, and this is just looks like it wants to gap up all the way back up to 264. So I really wish I got into this. Unfortunately, I didn't have the time. And the last thing I'll go over is actually two last things I'll go over is Tesla. So you guys remember the Tesla trade we took today. A lot of like we entered, I think the contracts I got in at $1.61. Obviously, I entered like right over here. Let me delete everything. So I entered right over here off this bounce off of the psych level of 350. And the contracts were up like 5% or something like that. And then after that, you guys saw yourself, Tesla came down. The contracts were down 37%. I got, unfortunately, a lot of annoying messages that were people who were not really knowing what to do and kind of blaming me and stuff like that. But again, I can't control news. There was a bunch of stuff going on with Elon in terms of meeting with the Indian Prime Minister. And then there was a bunch of, like, everyone was also waiting for Trump to speak based on the whole tariffs thing. But eventually what I wanted to happen happened. We did average down at around $1.13 for the contracts. Eventually the contracts reached a high of 175, so the trade was actually pretty profitable here. And the nice thing is, if you zoom out to the 15 minutes is a little bit hard to see, but you could see we formed an ascending triangle that we broke out of. And that's actually one of the reasons why I kept the risk-free runner heading into tomorrow. Now, we got tomorrow's expiration, so I fully expect these to go to zero if they do go to zero. But in the off chance, we've obviously seen that Elon Musk is going to be bailed out by the government. I mean, and Tesla's price was just falling down and down. And for those who took the Tesla TSLL shares with me, we bought it on Tuesday, and they're up pretty significantly. But with the news that came out about the government possibly doing a $400 million deal with Tesla and getting these armored Cybertrucks and stuff like that, that shows that Elon Musk does have connections, obviously, with Trump and stuff like that. And there's going to be times where he's going to be bailed out. So it's very interesting. We see the rebound here, and we see the ascending triangle. There's a possibility that Tesla gaps up to 261. I think Tesla tomorrow will be very interesting because the price action tomorrow will be very volatile, because you're either going to have a very strong breakdown, which will then cause this whole momentum to the upside to be just a dead cat bounce, or you can have a gap up heading into tomorrow, and then there's a higher possibility that actually Tesla regains some of the price that it lost and actually tests 365 and even maybe 370. So you might want to formulate a plan around Tesla, especially if you plan to trade it tomorrow, because it can be very volatile. And depending on where it opens and stuff like that, it could be a possible great day trade that you can maybe look at. And the last thing I want to talk about is Kroger's, because everyone was asking about this trade. I was disappointed about this trade as well. By the time I entered it yesterday, I got in around like 65 cents. By the time I posted it, the contracts were at like 68. And then before I knew it, like 1 second before close, JP was like yelling in my ear, "Oh, it's at 27%." I was like, "Wait, what?" By the time I looked back, like it was already market close. This guy already trimmed out at 27%, but I unfortunately couldn't because I didn't have enough time because I was just on my phone. But I mean, the setup was there. It was just really, really disappointing. I mean, you guys saw it yesterday. The rally-based rally thing was just solid on the daily, and you could see here on the 30-minute. We broke above the range, and this should have like we had a breakout we had a breakout right here, and this should have where is it? This breakout right here should have gone even further, but it didn't. I think it was related to Trump tariff news. Not exactly sure. The sell-off was just unprecedented, and we could have had even newer all-time highs for Kroger's, but that didn't unfortunately happen. And then near end of day, it came back and it kind of closed back in the range. So it's not the most greatest thing to look at, right? Because the max trim I got was just 22%, which is not the greatest. So Kroger's, I mean, I still have half of my position. Most of it I trimmed out around 22%. I guess the key things, I think, because a lot of people are still in this, is I look how it reacts tomorrow. If it ends up, opening below 65.56, it's not the most confident thing to look at because then that means you're back in the range and there's a higher probability it'll kind of, trade back to a lower range. So then the next question is how much you're willing to risk. If you're willing to hold it for a little bit, then what you could possibly look at is how it reacts to the level around 65.20. And then if not, then you could figure out if you want to cut out early and stuff like that. My plan, I'll tell you what my plan is. If it gaps down below 65.56 and opens down there, I'm going to see how it kind of plays out. The unfortunate thing is, the Kroger's used to have a lot of volume, but when stocks reach all-time highs, they start getting less and less volume on the option chains. So Kroger's is unfortunately a victim to that, and like I usually get 2 to 3 weeks out. I couldn't even do that for Kroger's. I had to get next week options because they were the only ones with volume. So we only have next week cons, so data is going to be a little bit higher. So we'll have to see here. I'll of course post if I exit, but the good thing is it didn't end up closing below 65.56, but it is unfortunately disappointing that closed below 65.72. But yeah, I mean that's all I had to say about the stuff I was looking at. JP, anything you want me to quickly show
Oh
or?
yeah, there's a lot of stuff that I was looking at to swing, but to be quite frank, I waited till the end of the day, and I only so there's a couple of things that I regret not getting into yesterday that I know some people took when I told them to, and I wanted to punch myself in the face because of it. And one of them was Chipotle, but we'll go over that after. Zscaler, ticker symbol ZS. This was a trade that I had put out an idea on back in October at 165, and we rode that trade all the way to 185 on shares. I'm so sorry, 140. I think I 155, and we rode it all the way to 185 on shares. Today, I love the way that it closed. I love that daily candle. There is a resistance right up here at 215. I like the way that 30-minute closed. If it does break above this tomorrow, I do see it trying to go for that 220 mark. Ultimate price target on this for me is that it will fill that gap all the way to 235. So that's definitely a priority trade that I'm watching. This is going to need some time to develop. If it gets above that 215, then it's going to be a huge, huge, huge wall and potential short squeeze to the next level. So Zscaler's on my watch. After that, I'm going to go through a couple of things that you're not going to like, but I don't care.
Actually, I
Um,
was gonna say Zscaler looks really nice. I think you
Zscaler
eventually it's 244 on that.
Yeah, this is going to be a longer duration trade. I will hedge my position on that by if it does dump, I would go short hack on it because hack does have a good position of Zscaler. Pepsi on the 30-minute candle, I really like the way that it closed at the end of the day. I was looking at a potential break above 144. It didn't actually do it. I
Yeah.
want to see if we can get above that 144, 145 mark and then try to push into that 147 and fill that gap to 150. The only hesitation I have on this is that now that RFK is the new health secretary, that there's going to be a lot of new new regulations on how these soft drinks are made and stuff like that. You'll see that we're inside of a bit of a pennant. Um I like that pennant, but I really want to break out of it because if you look at it from the 30-minute, you can just draw tops and bottoms.
Yeah, I
And
got it
I
up.
hate, you literally have it on. Okay,
Yeah.
cool. I don't like it when we're inside of those pennants where it looks like it wants to squeeze above and it could just reject the top and then try to get to the end of that pennant and then decide. So I want to get a confirmed break and close above that. That's definitely a priority trade for me tomorrow. Chipotle set itself up again. I know someone took that trade when I was talking about it on VC and they made 50% on it. And Pine Sol, if you're in here, I hate you, but I love you. He took that trade, gapped up, made the move I wanted to, push back down, and I think it's ugly, but it's there. A little bit of that. I'm not even going to say it because you're going to judge me for it. So I'm not even going to say the pattern that I see because it's an ugly inverted head and shoulders. Um, and it's on the 65 minute. You'll probably see it on the 2 hour. It's ugly, but it's in my opinion, it's there. Um,
You're
and
crazy.
I think it'll try to get back above that 60 and then try to make a move to that level that I have that's been like a preliminary level that I wanted to get to, which is right around 62, 63. Really like Chipotle here. An oldie but a goodie that nobody likes to trade, but it's a sleeper, Clorox CLX. CLX is prime to go, for my opinion, right here.
It's a nice
On the
daily candle.
daily, I love the daily candle. I love the way that it's setting up. I love where the RSI is right now. It's literally crossed over the moving average. MACD is trying to flip bullish.
Dude, the 30
Great
minute
day.
is perfect.
30-minute looks fantastic. The only thing that I'm a little bit hesitant about is that we are literally hitting a weekly pivot structure at 151.69, which coincides with the 200-day SMA.
I wish
So
I told
that
this.
that 151, if we can break and close above that, that's a reversal of trend. And we go to bullish trend on Clorox. There's a massive gap, and there's nothing stopping it from 160. That is my A plus trade that I'm looking at for tomorrow. XOM unfortunately failed on me. I had talked about how I really liked the setup the day before. I think it was on Monday when we did live sessions. I said I really liked the way that it was set up, but I wanted confirmation on the next day. It actually closed on a doji candle. I did not like that, and then it came back down, and it actually held surprisingly above that 107 level that I have. I want to see what XOM does tomorrow. If he can get back above this 108, 109, maybe 110. I'll try to see if I can fill along and look for those 115s. It's not where I want it to be, but it's something that I have on watch. And I have one more that you're gonna hate me for, but again, it actually I have two more. Celsius is back on my radar.
Oh my god.
Celsius on the daily looks great in my opinion. Yes, I
How
know
many
we're
times
going
has he
into
said that?
I say it all the time. It looks great on the daily falling wedge. 30-minute looks like it wants to try to fill that gap all the way to 25. I like Celsius here. I really do. I really fucking do. It's a me thing. Leave me alone. I like it. I
You know,
know.
one thing I'll have to admit is every single time Celsius does give a very strong bullish candle like this, you do have continuation to the upside. So I'll give
I
you
mean,
that.
I mean, remember, I had the insight on this trade when they said they were going to announce their deal with the Premier League and F1, and none of that got announced. They have earnings coming around. I don't know if it's going to be mentioned now. I don't want to hold it into earnings. Earnings is on the 26th, but I do think that we might have a little bit of a premium squeeze here because people are going to try to go bullish on it. And I think that we could probably get the 25 calls. Another thing that I'm going to be watching tomorrow. And last but not least, I'm very disappointed on what happened with Lockheed Martin. I was watching this all day today. I even text you around, I think it was around 11:30 or so, or was it around 11:30 or 12? And I said, Kevin, I'm liking Lockheed here. I really like the way that 30-minute candle formed at 12 o'clock. I thought we were going to try to get above that 445. Unfortunately, it just plateaued there. And after they had that whole thing with Doge that they're going to investigate the Pentagon and the spending, the military spending, Lockheed just dumped on me. I still believe that Lockheed is very, very cheap down here. Um, Military spending is never going to disappear. It's the number one producer for GDP. Does does it have more room down? Yeah. Could it go to 413? I would love it at 413. I have an alert there, but I still want to be bullish on military stocks. I don't think that we're in a safe enough climate where these stocks are undervalued where they are right now. And I think they're going to have another pop. Very disappointed with Palo Alto today. Um, the daily candle was set up for a breakout. You know that I trade Palo Alto like a degenerate. It's the one stock that whenever I say I'm taking this, everyone always takes it because I know the ins and out of this company. If we would have broken out of this level, it was going to go for 215 and break up to 220, and then 229 was my main target. Unfortunately, they did have earnings. They did beat top and bottom line. Unfortunately, their forward guidance was not to the liking of the market, and we did go for that 210 rejected and are now trading in the 190 range. I don't know if they're going to try to bring it back up. Um, it's something that I want to watch. Anything below 180 is a buy signal for me. There's a massive gap all the way down to 182. If it hits that, I'm closing my eyes and buying it. I do believe cybersecurity is an important aspect of the market right now. Yes, Zscaler did get hit because of the earnings on Palo Alto, but if I had to pick something to trade right now just because of the setup, I would rather get into Zscaler because they don't have earnings until March 5th, and I do think that they'll do better than Palo Alto because they're low key, not putting so much attention on themselves. So my favorite setup for cybersecurity is going to be Zscaler. Other than that, there's nothing else that I'm watching. I'm staying away from tech. I really liked QCOM at the end of the day. I didn't take it because you took SMH. And when you said SMH, I said, "Listen, this guy sees what I see in the semis, so I'd rather be weighted on the semis, on the overall semis market." So I took a very heavy position on that, um, because I'd rather just be in the entire sector than just one particular stock. So the fact that you took SMH and I was going to take QCOM, that made me feel comfortable for my position. So I went ahead and I took SMH.
Yeah, kind of tie hand in hand, right?
Yeah.
I
Oh,
want.
I hate to interrupt you. There is one thing that I have been watching. That is the RSP, the equal weight S&P ETF. I'm telling you right now, I don't like what it's doing. I don't like the way the equal weight is trading. It's inside of the stupid rectangle. It can't break up above 183, and it's not breaking down below that 177 mark. Something's gonna budge here, and it's got to decide what it wants to do. If this equal weight keeps trading inside of this block, it makes me nervous. It makes me nervous. I don't like this. So the reason I don't like it is because then that means that we're only going up because of 6 or 7 stocks. You know what I mean? It's
Yeah,
not because of anything. The equal weights are telling you that there's nothing happening. So it's just a matter of time before something gives, which is what scares me. And if you look at the bigger picture of it all, like if you look at the overall markets, even if you look at the futures, we're still doing lower highs,
Yeah,
right?
if anybody doesn't know what RSP is, it basically takes all the stocks that are in the S&P 500 and equally weights them. So on the for example in SPY, Nvidia might be a lot more heavily weighted in the ETF versus a stock like PLD, right? So that's what the RSP is. So the reason why it's important that JB brought it up is because if you want to see the actual health of the S&P 500 and see what majority of the stocks are doing, you would want to maybe focus on the RSP and trying to see what's going on. So you can see here on the daily candle, right, we closed pretty bullish, which means majority of the stocks in the S&P 500 are primarily bullish, at least for today. But as JP was saying, you kind of stuck between this range. You could see the last time we brought up RSP, I literally told you guys that, it was the second bearish candle in. And JP and I both talked about how this is going to just plummet down. And, that's exactly what happened. So RSP is a great indicator you can look at. But yeah. Um,
I mean, I hate to say it, but I keep track of the ascending descending line on the S&P, and the amount of descending stocks versus ascending today, it was it wasn't looking good, So again, I'm similar to these old guys. I like to be bearish in these high evaluated markets, but you know, I'm just I'm just watching, bro. I'm just keeping an eye on what's going on. Simple as that.
so I've actually been getting a lot of questions about my long term, even though I've been talking about it on live sessions repeatedly over and over again. And by the way, if you did ever, did listen to my opinions, a lot of the things I'm talking about have been massively green. And the two things that are red are things that are supposed to be red. So I'll get into it. So the first one is Mara. I've always been talking about Mara. The reason why I have Mara is I sell covered calls on it and I sell puts on it. So if you guys don't know the wheel strat, you could go check that video on our YouTube. But Mara is very volatile stock. Premiums are very inflated, so I sell covered calls on it. I sell cash secured puts, and I collect premium on that, and so on and so forth. So I personally think it's a great wheel stock. There's obviously the risk to it because it's very volatile. We could see that Mara has retraced all the way from 28, where it was gonna break out, all the way down to 1691, and that was just literally in a time frame of from November till now. So that's what, four months, right? Yeah, 4 months. So it's pretty volatile, but you could see here that it's coming up to a very important trend line, which is good because I do have a decent amount of shares in this from all the puts that were assigned to me. And I've been slowly getting profitable because from Mara itself for this year. So we have a really nice daily close on it, which looks really great. And if you go to a smaller time frame, you'll see that there's like a mini rising wedge in this as well. So Mara is something that I really like. And if you guys don't know wheel strategy, you could check that out if that's, you're able to do that with your risk. The next one that I will drill into your heads for the millionth time is I don't know how many times I have told you guys to look at Baba. I told you guys this from $85. I told you guys this at 92, and I told this to you guys at 94 and at 100. It is now currently at $119 from the price I've been talking about. You could go check back in all our Saturday tickers, and a majority of them you will hear me talking about Baba and how if you have the patience to hold it, it could potentially be one of the best rewarding long-term growth stocks you could buy. Because Baba is one of the biggest mega cap stocks that is severely undervalued. And if you bought the shares the same time as me, from the worst entry I got, I'll tell you exactly right now. I'm gonna pull up my thinkorswim. I am currently up from my worst entry. I'm currently up 39% on my worst entry. That is insanely high. And the dumbest logic you could hear is people saying, "Oh, it's China." No, look at the numbers. And if you don't want to look at the numbers, you can't really blame me for that, right? So it's amazing. Baba's squeezing. Your next question might be, is it too late Can't answer that for you. All I can say is my eventual targets. I want it to go to 140, and I want it to actually reach 160. As you can see here, I drew like a bearish fib here, and that bearish fib is from the weekly chart all the way from this high to the low. So my target is around 157, 160. I did trim out some of my shares because obviously, as we know, this is going to be affected by possibly by tariff news. But here's the thing, everyone thinks that tariff news is going to affect the Chinese stocks, but as we've clearly seen, it's affecting more of the US stocks than the Chinese stocks, right? So what I'm personally, my plan on this is I'm just letting my runners go. Well, not even runners because I have majority of my position. I'm letting my shares go, just go wherever it goes. And if it retraces, you best believe I will be adding shares, especially at important levels. So important levels, you might be asking what that is. That's going to definitely be near the $100 mark. That is pretty low. But as you can see here, there is pretty volatile swings on BABA when it gets this very high and intensive. So you can always look out and see how it reacts to these levels and see if there's buyers interested or not. So that's what I'm going to be looking at around the $100 level to add more shares. The next one, another Chinese stock, Baidu. Now Baidu is benefiting from this news, but not so much yet as BABA. You can consider Baidu as a potential Google of what Google was. When was it, JP? Like 5 months ago? When it was like lagging?
Like what was it, like 119, 120?
Yeah. When like Google was all the way down. I'll pull up Google right now. It's funny because
We were talking about how
yeah,
Google was the lagger of the mag.
exactly. Right down here. That's crazy. We were literally talking about how when you see a sector rising, or you see similar stocks rising, sometimes if you're okay taking on risk, you would want to look at the undervalued or laggers of that sector and pick those out. And that was Google, right? Because at that time Netflix, Meta, Amazon Video was running, and we said Google was the lagger. JP and I both said it, and ever since then we were talking about around like I think it was 159, 160, somewhere like that. And lo and behold, Google's all the way up to 206, right? This is one of the long-term positions I had. I unfortunately sold a decent amount of it pretty early. That's my fault, but yeah, I mean, also now, as you guys know, Nancy Pelosi has leaps in Google as well, so maybe a possible future entry is very valid. But Baidu is something to also keep an eye on. You could see here today, I added more Baidu shares, I think literally right here on Tuesday. That's not a lie, like I actually did. And I've been adding shares every single time it made lows. So I think I added right over here at 84, and then I added again around like 80. But yeah, I mean, Baidu's I wanted to run up to like $1.15. That's one of my bigger positions on my long term. The next two are Misty and Coney. I'm not going to get really deep into this. These are very risky trades to get into. The way these works is these stocks basically sell covered calls, and then through the premiums received through the covered calls, you get like dividends, and the dividends are like insanely high. But as you can see, the NAV erosion, which basically, if I simplify that, what that means is the actual value of the stock goes down a very significant amount. So even though MSTY pays out like over 150% in distribution rate, which means that in a whole year it'll pay back like all of its value, you could see how terrible the price reacts. So if you're like really hell bent in getting this, I mean, maybe I personally think Coney is a safer option than MSTY, because MSTY follows MSTR, which is a lot more riskier than Coney, because you could consider MSTR as like a Ponzi scheme, as JP says it. So yeah. By the way, Roku, I talked about this last live session, or the live session before that. I think I actually talked about it on Monday. I talked about how I had shares from $80 and I was taking it at earnings. Guess what? I think today, guess what price Roku ended up closing at after earnings? It hit 101 and it closed at 96. So I'm up major on Roku. I hope someone listened to me. If not, then it's not like it's one and done with Roku here. But this is a pretty giant move. The interesting part, and I don't know if you saw this, JP, Roku beat its EPS by 41% and its revenue by 4.5%. And the funny thing is, JP and I talked about Roku many months ago when we first started, brought back live sessions back to life. And we talked about how stocks like Affirm and Roku might be a key leaders in growth because we're coming to a point where people can afford less and less things that are more expensive. And Roku is something that that is able to give able to give things such as streaming platforms at reasonable prices, and basically instead of buying a smart TV you could use a regular TV and all of that. But yeah, I mean, we've been talking about Roku. It finally broke out. Earnings is amazing. It's going to be opening at around 96 or 98 tomorrow, so there's that. Affirm, another stock I talked about on live sessions. I talked about how I was holding it and I bought it. I think like I'll tell you my price on it. Affirm I bought at 58.84. So we bought it before earnings, and I talked about how my thesis on earnings and how even though I don't know too much about fundamental analysis, one thing you have to admit is ever since Affirm got that partnership with Amazon and now it's always appears on Amazon, you have to think to yourself, hey, would a company like Affirm, which allows all these installment plans, would that gain attraction? And of course, the answer is yes. Like, I mean, think about it. On Christmas, when people want to buy expensive gifts, you think they're going to, pay a debit credit card when their credit cards are near their max balance? No, they're going to use Affirm because they'll think, hey, it doesn't impact my credit score. And, I get to only pay like $50 or $20 per month for a purchase that's like up to like $1,000. So basically what I'm trying to say is I talked about it. I hope someone listened. I beat earnings. Amazing on revenue, 7% beat on earnings. The stock is all the way up at 79.28. You can see the fib extensions I have on it. I want it to reach $92, and that's where I'll take my next trim. I already took one trim, but I will be. Affirm is not a position where I will not look back to add. I definitely will be looking back to add. The two areas I'll possibly be looking at is 73.34 and 68.20, around those areas. It depends what Affirm does. If, for example, a firm pushes up much more and then retraces, then 73.34 is where I would be looking at. Versus if a firm were to kind of like sizzle here and then come down, 73.34 might not be a place I would look to add. I would rather wait for 68.20 because that's more possible. And then that itself is a little bit risky because then there might be a gap fill. But again, with this stock being very strong with it beating earnings, we're filling the gap is less likely to happen. SLV, I've recently bought silver shares because it's somewhat considered as a safe haven. So it's a lower beta stock compared to higher beta stocks. What beta means is basically the value or the measure compared to the rest of the market. So SPY is I think a beta of 1, right, JP? And like Nvidia might have a beta of like 2, for example, but silver has a beta of I think like 0.8. So what that means is silver moves at a slower rate compared to the higher volatility stocks like Nvidia, right? So if you believe a recession is happening, but you still want to quote unquote beat inflation by having your money in some potential stocks, might want to look at lower beta stocks like silver, right? So silver is in my portfolio. Other else than the fact that it has an amazing setup right now. It broke above this. I don't know how the hell. Oh yeah, it broke above this trend line. And it's also creating nice daily bullish candles. It's also a nice possible recession play. You guys probably seen if you're on Twitter, there's a huge amount of, I think gold has been rallying, right, JP? Gold has been rallying.
Yes, gold rallied to all-time highs. I know you're going on a talk about silver, but just keep an eye on metals in general because this is more of a rare earth, whatever you want to call it, rare earth mineral, rare earth orb trade, whatever it is. So you watch, keep an eye on copper, palladium as well. I'm sorry, palladium.
Mm-hmm. I
Things to
remember you
watch.
actually talked about that last
Yep.
time. But yeah, that's all that about silver. Another long-term trade I have is OSCR. It's funny because actually, yeah, Oscar, it's a health insurance company, and it was brought to my attention. I had this on my watch list, but the person who actually brought it to my attention is this guy on Twitter named his name is the Long Investor, and one thing he pointed out that I did not see at first was the potential cup and handle here on Oscar on the weekly chart, right? So props to him for finding that. But it's a pretty great setup. There is definitely some risk to this. You could see there's downside, and you don't know. You could draw out a fib and try to see where the possible entry points can be. But when it comes to fundamentals, this company is pretty strong. One of the things I personally like about it is even though health insurance companies are pretty shitty and pretty unmoral, uh, Oscar does have one of
Immoral, not
immoral.
unmoral.
Okay, all
Immoral.
right, immoral. My bad. One of the great things about Oscar is the fact that it has actually one of the lowest denial rates when it comes to claims. So Oscar is just something definitely keep an eye out in terms of long term. Another one I've been talking about, and I sigh when I say this because I don't know how many people listen to it. Another one I've been talking about is hymns. I mean, I brought this to you guys at $19, at $24, at $29. From $29, which is my worst fill, from $29, this stock is up 101% currently right now.
We talked about this. I even told you that I thought him. I told you that last year this is a $50 stock. Unfortunately, I didn't have the funds to just park him and leave him there.
Yeah,
Biggest regret that I have outside of Palantir when we had it at 17. That's all I got to say about that.
yeah. I mean, yeah, I mean, it hit my fib extension level. This is the max fib extension I have. So the 58.93 was kind of my peak point. I'm not adding right now at all whatsoever. I'd rather it have. I wish it didn't honestly reach this rate, and I might feel very weird to hear, but I wish it rejected at 45.61 and came and retraced down to like 35 or 37, because I would have added a lot more, and that pullback would have been a lot more healthier. Now what you're looking at is once it eventually rejects, you are going to look at a heavy rejection, and I definitely will be adding once it rejects, but then it's going to be a little bit harder to try to figure out where exactly you would want to add in, right? You would have to more look at fibs instead of levels, so it makes it a little bit harder, the fact that it's kind of squeezing over here. I mean, today itself, it's up 27%, which is insane. It was funny because in the morning I was looking at it, I'm like, oh, shoot, it's at $48. Next thing I was looking at, I was like, oh, it's at 52. And then near end of close, like 30 minutes after, I see it's up like at $59. So it's pretty insane. But yeah, another stock I got into very recently is SERV. It's a robotics company, very fairly new, as you could see. IPO'd very recently, but I love the setup on the daily. You could see the trend line it broke above out of, right? And you could kind of say it's got the double curve pattern. What that basically is this thing right here. I'm just going to draw it out instead of using the magnet tool. You see you got a curve here and you got another curve here. So the points I'm looking at, you can already see we're about to hit the first target I have, which is 23.74. Just for comparison, the entry point I had for these shares was not too long ago. It was at $21. I'd want it to reach 25.86 for me to get my first trim, but my ultimate price target, not my ultimate, but where I'd love to take my majority trim is up here at $32. So something to keep an eye on. But of course, these companies are a lot more riskier, as Ray Pitts was talking about. These kind of companies are a lot more riskier compared to other companies like, let's say, Microsoft, Amazon, Apple. Also, earnings are coming out on February 26th, so that's something to keep an eye out if you do look at this. The last one I'll look at that I have is ACHR. We talked about this like a whole month and a half ago. We actually entered right over here. I talked about how was that going to enter the next day. Monday came along. I entered into shares and we rode it all the way from 840 all the way up till I think it was only $11. So I actually sold early. I didn't sell up here. I recently got into this because you could see the trend lines trying to break. Not so much of a great rejection here on the daily. So we'll kind of see how this goes. And the last two I'll talk about before we head on to the tickers you're talking that you guys want us to go over is
Kevin, I'll be back in 1 second. Okay.
yeah, no worries. BTI, for those who are interested in dividend stocks for long-term growth, maybe something you want to keep an eye on. This thing has somewhere around, I think, consistent 6 to 7% dividends per year. You could see their current dividend is 6.88. The great thing about it is it actually had a very major breakout on the weekly. So something to keep an eye out if you're into dividends. Roblox, we talked about this in live sessions numerous times. I mean, it's up all the way from where we talked about it. We were talking about it all the way down here. Where is it? Where's the price tool? We were talking about it right over here before this breakout. It's all the way up 49% from when we talked about it. But yeah, so we're going to go ahead and talk about the stocks you guys want to talk about. You can post the tickers, and we'll go over the tickers you want us to look at. So I obviously know a bunch of you guys are going to ask about SPY, so I'll just go ahead and go to SPY right now. So SPY, what's going on, right? Beautiful close on the daily. One thing that's a little concerning is the fact that all these data is coming out is technically bearish, right? Because we're having inflation on the rise, and inflation does not seem like it's able to, be controlled at this point. So where do we go from here? I mean, we technically have a technical breakout. Sorry, I'm burping a lot. You can see we broke above the trend line. And if you go to the 20-minute or 2 hour, sorry, you can see SPY has been trading in this pennant. And I called out this pennant quite a few times. This was actually a perfect pennant to trade like iron condors in when it came to SPX and stuff like that, which I did. But you can see it finally broke out of that pennant, and we're breaking above the first fib extension level. Next targets would be 612 and then maybe 625. But I mean, you don't need to be a genius to figure out what Rapid said earlier in the talk. Like, even before he said it, you also had to kind of get a feeling like, hey, everything's going on. Like, is this really in a safe place, right? So technical wise, if you look at this, yes, absolutely, this is a very strong breakout. And if there was nothing wrong with the market right now in terms of the economy and all the tariff news, I would say, hey, I'm going long on SPY. I'm buying leaps. I'm buying shares. I'm looking at Nvidia because Nvidia is heavily weighted. I'm looking at Apple, right? And I'll be completely long on this. But another thing that'll tie into what JP was saying is, if you look at the RSP, if you compare that to the SPY chart, look at how bearish RSP is. The only fact you could say RSP is bullish is if it breaks above this trend line, and that will really dial down to tomorrow and Monday. So SPY is definitely in a tough spot. I mean, technical wise, as I said again, it looks like it's breaking out. It's gonna probably reach all-time highs tomorrow, if not by Monday, if not by tomorrow, unless for some reason data comes out or some news comes out tomorrow that will completely eradicate this complete setup. Do I think that will happen? No, because usually candles followed by this usually are followed by a very strong move to the upside. So we'll see how this goes, because there's going to be a lot of people who are very short on this because they have the sentiment of, hey, everything's overvalued. And even though that might be right, I think the bulls might be stronger tomorrow. So definitely okay, what I'm trying to say is, if you're going to trade SPY tomorrow, which again, I personally am not a huge advocate of, but if you're going to be trading futures or zero DTEs on SPY QQQ, because if I go to QQQ, I'll have a similar setup, right? You have even the QQQ has a better setup than SPY. You don't want to go into this too heavily biased in terms of sentiment. I think it's better to keep a prevailed head. This is just my opinion. You guys can follow your own plans. I personally would rather just wait for the first 30 minutes to go by, try to see what the trend is, and then maybe kind of figure out what the levels or the miniature levels are for me to trade based upon. You could easily figure that out on the 5-minute. But yeah. All right, let's move on to the other tickers. You guys can post in main chat or live session chat. I'll look at it. Let me see. Sorry, I was taking a sip of water there. Do I think VIX will go higher? Absolutely. I mean, VIX will always increase in bearish markets. So if you believe there's going to be a bearish market soon, then yes, you would theoretically believe that the VIX would increase by spring. I already talked about SMH. I'll post a recording late tonight so you can look at it if you're on here. So I'll post it later. Let's see. JD. Oh, thank you for bringing up JD. JD is another Chinese stock.
I heard
Again,
someone say something about the VIX. I have returned. What do you need to know?
they were just saying, do you believe that the VIX will increase in spring, by spring?
Uh, okay, so in other words, do
Like,
I think the VIX
go up.
is it going to?
Hello?
Do I think the VIX is going to pop?
Yeah, by spring.
Well, I have the VIX completely charted out. If you can open it up, because I trade VIX calls all the time against my positions. So, if you pull up the VIX, I'll give you the exact levels that I'm watching. And by the way, if you're going to trade the VIX, you need to have the S&P index, the actual index, not the futures, not the CFD, side by side with it, so you can understand the correlation, because the VIX is the volatility of the S&P, and without it, you won't really know what's going on. Key level on the VIX on the daily right now is at 1458. I have an alert at 1458, and then underneath that, I have a level at 1409. I'm looking for the VIX to break below 15. I don't trade the VIX between 15 to 18. If it gets underneath 14, I will initiate a position. Under 1409, I'll take my second position. Anywhere at 13, I'll take it. And then I would be looking at anywhere for VIX calls to pop all the way to 1725 or 18 or 20. And remember, when you're trading the VIX, you have to remember that those things move really volatile to the up to the downside. Just know that you have to have those key levels in place. And for those that were listening to Ray Pitts, when it gets to 13, you close your eyes and you just hit the buy. And that's been said to me by more than one professional trader, by the way.
Cool. All right. Let's go to. I'll just quickly go over the rest of the stocks. So JD, another Chinese company, has a very nice bullish daily candle. You would kind of want to trade this to break out of the 42.24 level. This has a very similar chart to Avgo, so keep an eye on that in terms of calls. All right, Nike. Nike is something JP and I have been keeping an eye on. He actually told me yesterday,
No,
hey, we should take out a Nike calls, but
no, I don't
yeah.
like it here now.
I see no technical setup personally. I think like
No.
if you're looking at long term, is this a bad position to maybe initiate? Not really, but maybe you'd want more confirmation. I don't know. I mean, I'm definitely keeping an eye on it, but I haven't started buying shares for it personally.
Yeah, I'm not sitting around jonesing over it anymore.
Yeah. Apple, by the way, everyone, it had this sell off, kind of rebounded. Everyone thought it's a dead cat bounce, but now again, it's rebounding, and it looks like it's going to break above this 240.13 level that we have here, and eventually test 250 and above. So tomorrow is going to be very crucial. I think this could easily get above 247 and hit 250. I don't know if it'll reach 258, but you can't really put it past Apple at this point. When it goes, it really goes. It's very strong. If you guys remember, we got Apple calls back here, and that went up 800%. So something to keep an eye on. Let's see what else. Kevin, in your fib extension video, you mentioned a couple XPX strategies used on a small account. Do you have a video? No, I've not posted any SPX videos yet, but I will when I get time. I will when I get time.
I got a ticker for you.
What's up? Which ticker?
INFL on the daily again.
Yeah, looks good. Form dependent.
Mm-hmm.
I'm getting tired, so in a little bit I'm gonna wrap it up. Could you talk about the difference between leap calls and holding shares? I didn't get the Roku share, but got a 60 call leap. It seems to work great. Yeah, absolutely. So it's very simple. Think of it like this: if you buy like 500 days out, and you buy in the money contracts, and you have to look at delta when you buy leaps, right? Because when you buy a share, the delta is also going to be 1. So when you buy leaps or options, the rule of thumb is if you buy like 500 days out, you want to go in the money and you want to go for a call leap that's around the delta of 70 to 80 based on your risk, right? The more risk adverse you are, you would want to go for a higher delta because then you have more protection. But the more riskier trader you are, you would go for a delta that is lower. So you go for 70 or lower because then you have much more leverage. So the way it would work is if, let's say, instead of buying 100 shares of Roku, right? Since you brought up Roku, instead of buying 100 shares of Roku, you could buy a leap call, and if you're very, very confident, that's when a leap would shine and outperform a stock. Because buying shares, I mean, because then you're having leverage on your trade while minimizing the risk. So in most times, leaps are actually better in the money, deep in the money, very far out. Like we're talking 500 days plus leaps in the money are actually better than shares, because they outperform shares. And if you actually try to hold them and you treat them as a buy and forget kind of thing, similar to shares, if the stock ends up going your way, they perform really, really well and they return really well as well. So leaps work really great on stable stocks, very great. And there was an example. I think it was like Microsoft when it was like in the COVID highs and then it like dropped down. If you were to buy a call leap on Microsoft that's deep in the money at that time, I'll show you right now what I'm talking about. So if you were to go to Microsoft, you go to weekly chart and you see back in when was it? 2022. This was the high, right, in 2021, and COVID hit. If you were to buy a leap at this peak, and you could actually backtest this on Thinkorswim, and that's why Thinkorswim is a great platform. You could go all the way back here, buy a call leap for that's deep in the money, let's say 70 delta, and you were to go 500 days out. 500 days later, that call, even though it went through all of this, it regained all of its value and it was up, I think, like 135%. And it was that example was brought up by a YouTuber named In the Money. I think that's his YouTuber. Yeah, it's his handle. So you can search that video up. It's really great. And your question that you asked is then why don't you use leaps more on the long term? Few reasons. One, because this long term is supposed to be like more of a shares thing versus an options thing. And I personally prefer holding shares, and I would much prefer buying leaps when the market overall is undervalued compared to being overvalued, which is the current state which it is, right? So when it comes to options, even if you buy deep in the money leap options, the entry point and the time of entry is still very crucial. So that's to make it simple. The market's very overvalued right now, so maybe leap options are a little bit more riskier compared to buying shares. Because with shares, then you can have the possibility of dividends. Even if the dividends are small, it's still something. So, yeah, that's why. I hope that makes sense. Let's see. Ooh, Rio. I have not heard this stock before. Probably you
Wow.
have, since it has metals, right?
Wow.
Look at that weekly. That is a beautiful weekly. And that's a beautiful weekly candle. Now, of course, you have tomorrow to kind of figure out how the weekly candle closes, but that weekly candle looks juicy. You're breaking out of the bearish channel here, and you're held a trend line support 4 times, almost 5. So this is a great setup. Thank you for bringing it to my attention. I'll definitely keep that on eye for my long-term account. I would actually love that, because if you look at this, if I zoom out, if I draw a fib extension, you could see if I buy shares and I plan to hold this long term, I would be targeting like 81 passively, right? Because if I'm buying it here, I'm technically betting on the fact that I'll break out of this descending channel and break out. So 81, 88, that would be great. And you said dividends are great, so let's see. Yeah, dividends is 7%. This is actually pretty great. This is similar to the BTI, but yeah, both of these are great. Can we look at docs? JP, do you know anything about docs?
Never even heard of it. What the hell, docs?
Neither have I. That's a crazy strong ass chart on the weekly. I would say I have no opinion on it, and because it's already made a very significant. I already did crowd, by the way, so I'll just post a recording later, and you could check that out. But Docs made already its very strong impulse move. Does that mean it won't go anymore? I don't think so. I mean, that daily candle close is pretty nice. So I would say the next target for this is 90, 97. If you were to ask me if I would personally chase this, because it is technically chasing at this point, I personally won't. But I mean, it beat on earnings. It apparently beat in revenue by 10%, which is insane. And I love the setup on the weekly. So it's not something bad to look at, especially if it has a nice retracement. Like if I go to daily again, if this has a nice retracement to even fill a little bit of the gap, actually would be a nice entry to get. Maybe like 61, 69. But I mean, this daily candle is pretty nice. So yeah, interesting. The calls versus puts are interesting. I haven't looked at the option chain, but I guess the calls are much more
Nasdaq is breaking out.
stronger. Um, when will we do the price action chart? Well, that's the thing. Like I'm not trying to. I'm not trying to put it off. The reason why I'm leading up to that is because there's so much more things you guys have to technically learn. And we talked about how the whole price action thing, that will be me talking for like, like 3 hours straight. And I can't believe I had to do that, but I will. The important part was we had to learn about volume analysis. So we talked about that. That was very important to get above. And I had to think about what topics we had to talk about before price action. But the price action thing, when we do that, like that will require a lot of energy from me, because the perspective I have on price action, I'm not okay. I'm gonna brag, but the perspective I have on price action is unmatched. It's just a fact, and
Wow.
well, well, that's the truth, right? I mean, who interprets price action like me? It's not like I was given a gift. It's just I was able to understand it, and I want to explain it. But in order for me to explain it, there's also other important parts I need to tie into. So, like, for example, we talked about the MACD on Monday. But the funny thing is, learning about things like the MACD, RSI, moving averages, fib retracements, all of those things, as weird as this sounds, tied into me getting a better understanding of price, because I took everything that revolves around the market and understand the market internals and mechanics and stuff like that. And when you look at these candles and you look at these prices, it's not just like, I know I always keep on talking about the wicks, the VIX, right? Not the VIX, the wicks on the candles. My bad. I need water. I keep on talking about that, but there's so much to it. And it's not just about, hey, there's a wick on the candle, it's bullish, right, or bearish. No, it's where exactly is that candle? Where is that wicking from? Where's the body of that candle, right? So there's a lot more things that are involved. And if I wanted to just teach price action, I would. And I'll be completely honest with you, like, I've done paid one-on-ones before. I mean, I even do it now, but I don't even have the time for it. And I literally would charge like $500 per hour to teach it, or like $200. But the thing is, I can't even teach it in one session. And it comes off horrible, because it's almost like, hey, I can't teach you this, so you got to buy more hours. And then obviously, like, people can't afford that, and it sucks. So it's not like I'm trying to prevent you guys from learning it. It's just there's a lot more things there is to learn for me to eventually lead up to that. So hopefully that makes sense. Uh, yeah, that eventually will happen. I will definitely talk about it. Um, so that like that will deal with examples, talking about everything, and then yeah. But any Meta puts, I guess that's the last thing I'll talk about. By the
Yeah,
way,
we can talk about how Nasdaq is just breaking out.
yeah, it is. Yeah, I'm not.
Like nasty. It's just nasty. Like nasty girl. I've been a nasty girl.
I
Nasty.
mean,
I've been a
Roku beat
nasty girl.
earnings. That's like massively bullish for Nasdaq. Sorry if I sound tired. I'm getting a little tired, but Meta has been green past 19 freaking days, which is
Holy
insane
mother of Lord.
on the daily chart. I've always had a saying, and I personally stick to this because Walmart will be the perfect example of this. I will never short a stock at all-time highs, and not because I can't, but because it's much more smarter not to. Because short squeezes are a lot more easier to happen or more probable to happen versus a rejection at all-time highs.
That's
So
true.
what's and you guys remember the Walmart put I got? I mean, that thing looked perfect. And you want to see where Walmart is at right now? After we took it, created a new fucking all-time high. Like, this is no joke. Like, this is the reason why I say that. So what's the best way and the safest way you could possibly play all-time highs is, you just wait for rejection, and you wait for bearish movement, and then you'd wait for a retracement. But you have to make sure that retracement is not just going to be another leg to all-time highs. You need it to reject a level that's very important, and you'd want it to form a wick, and you'd want it to form a weak candle, and that's where your entry point would be for puts. So basically, when it comes to Meta, I'm not looking at puts anytime soon. I'd rather wait for it to show me something. And maybe, I guess what you're asking is when I would look for puts. I look at below 710.79, because if it gets below 710.79, the next levels you'll probably be testing is, 675 and below. Because if you zoom out, Meta's chart is one of the strongest charts you ever see in the market, other else than Costco. So, yeah. And when I mean below 710, I'm not saying just the second it goes below there I'm buying puts. I'm talking about a retracement below here, coming back up, rejecting around this area, and then taking puts all the way down. What indicators do I use? I don't really use indicators except volume indicators, so that's regular volume and the VRVP. When it comes to long term, indicators I would use is, me personally, is, where is it? Where do I have it?
Speaking of indicators, I'm actually having to make some adjustment to my EMAs because I've been back testing some areas of support and resistance on EMAs. And for the last 3 weeks, the 48 was working better than the 50. And it looks like that those 2 days, even though you don't think they make a difference on those EMAs, they're making a hell of a difference. So I just had to adjust the 48 to the 50.
Yeah, I mean, the moving averages, they're pretty important. When it comes to day trading and swinging, I do not use any indicators, but except VRVP and volume. But when it comes to long term and buying shares, I love the and I'll bring up a stock right now. Let's bring up. Let me think of what's an undervalued stock right now, JP?
Lockheed Martin.
Okay, fine.
What? Fuck you. You asked me what I thought was
I'm
a
just
undervalued
kidding.
stock.
I'm
Lockheed
just
Martin.
kidding.
It
Uh,
is.
yeah, it's still the great thing about so what I have right now is a 200 moving average. And what this does is if you go to the weekly and you look at stocks, let's say for long-term positions, not every single time, but majority of the times when a very fundamentally strong company drops below the 200 weekly moving average, it is considered very undervalued. So whenever you see this, like you could see Lockheed Martin right now is below the 200 weekly moving average, and it's a little bit below, right? It's right now, the moving average is at 468. Right now it's at 434.72. And you could see every single time it's dropped below the 200 weekly moving average, it's eventually gone back up, right? Because you're going from under the mean to the mean, right? Everything always, if it's a strong company, it always goes from being undervalued or overvalued to back to the norm. So the norm is usually considered the 200 weekly moving average. Now the entry part, that is other things you have to tie in, like levels and confirm supports. We've talked about that in the past, so you can always check out those level videos. But another great long-term indicator that I have no shame in talking about is the RSI. I mean, what's wrong about looking at the RSI when you're looking at shares, right? I mean, that's the main purpose of the RSI. It's a relative strength index. The main priority that it was used for is stocks. It was not really used for options, right? So it's a great indicator to possibly look at when it comes to long term. Do I primarily look at it? To be honest, no. But one thing you can look at it is RSI price divergences, and we kind of talked about that in a previous video, so you can take a look at that. But it's mostly the weekly 200 moving average, which I think is really great to look at. I mean, look how long BABA was below the 200 weekly moving average, right? And of course, you wouldn't buy it in the downtrend. You would buy it when it's in the consolidation. That's when you look at accumulating shares of a company you really like. So yeah, those are the indicators I would use only for long term. But again, primarily trading when I'm not trading shares, when I'm doing options, it's just volume profile and volume. And both of those indicators we have a video on our YouTube, and you can find our YouTube through the links channel in the server.
Someone asked an interesting question. How do you, I like the MACD video. Well, I like it too. How do you do back testing? Jay Jabsco?
Jay
Jabsco.
Bosco. I bet his name is
Jay
Joseph Bosco.
Oh, I bet you it is Joseph Bosco. And so if you ever want to do some proper back testing, you can actually, there's a way to do it on TradingView where you can back test. There's a strategy tester, but if you actually want to do it yourself, it's much easier. You look like you're old like me, but I'm obviously much more handsome.
Wow.
Get a composition notebook, okay, and look at the 5 minute chart, because if you're scalping, you're mostly using the 5 minute chart, and look at how many time price returns to that specific, for example, with EMAs, look at how many times price returns to that 50 EMA or that 48 EMA, right? So if it goes past the 48 and it wicks the 50 more times during a week period, like a week of time, it's showing you that that 50 has now become more of a magnet than the 48. Same thing with an 821 EMA cross or a 921 EMA cross. I switched from the 921 to an 813 21 because I noticed that price was getting respected a lot more at the 8 and the 13 than it was at the 9. And I tested that through about 2 weeks, and it's like, okay, on the 5 minute chart, it bounces off, it breaks below the 9, the 8, and it holds the 13. And if it holds the 21, it's a position that I can add to, right? You just keep marking it. How many times it works, how many times it doesn't, how many times it works. And that's kind of how you back this strategy. If after 10 days you're seeing consistency in the pattern, it means that that's working. It's a lot of work to do, but it's better to do it manually like that. Like I just said right now, I just changed my 48 EMA back to the 50 because I've been for the past week realizing that we've been breaking below the 48 more often than we have the 50, and the 50 is serving for more of a major support. So it's just a matter of you just going through it. Do you have to adjust them every time? No, you don't. But for me, I do, because I like making sure that my strategy is on point, because I am an EMA trader. That's what I am. I'm an EMA level 2 trader. So I have to make sure that everything's working.
So I actually have I want to show you guys a way you can back test if I can figure it out. So I've always been a high advocate, or I've been always advocating for Thinkorswim, and I'll pull up one of my accounts here. I'll pull up actually one of my father's accounts that I trade. Let me make sure I'm sharing the right screen. So the cool thing is, if you have Thinkorswim, you just need to put $50 in, and it gives you the live prices and stuff like that, so the quotes are not delayed, and you need to even trade with it. So you can just use the Thinkorswim platform and just get like the thing I'm going to talk about right now. So let me pull it up first. Let me make sure I'm streaming. All right. So can you guys tell me if you are able, this is the whole. This relates to a back testing. But are you guys able to see my thinkorswim?
I can see your thing.
Okay. So there's a feature here. Let's go on to a stock. Let's go to Microsoft, for example, just because that's the first name I thought of. Of course, you can see Microsoft's chart, right? Here's the cool thing you can do with thinkorswim that no other platform, I believe, gives you. There is a feature on the top right called On Demand. And what is so amazing about this is if you press On Demand, you can actually select a day in any time in the past 2 years. So you can go to the, let's say, the 5 minute chart on, let's choose another stock than Microsoft because Microsoft is shit stock now. Let's go to Tesla. I'm on Tesla, right? Right now it's showing July 2024. I'm in 2024. Let's go to January 29th. And let's go to the time. Just go to 13 hours, which I think is 1 p.m. Eastern. So we'll do that. We'll press go. Wait for it to load up. This is the exact price of Tesla at that time. Now here's the cool part. Is you can actually go to trade and you can find the same freaking options and the actual prices of those options back at that exact time. So that is insanely insane, and no other platform does this, and it's taking a while to load right now because it has to load back.
That's
Look at this.
insanely insane.
Yeah, you heard me right. Look at this. What other platform gives you the exact prices of the options back at that time, and it's actively moving exactly as it did. So you can actually literally bring up a buy order, right? I can buy, let's say, I think I go back to the chart. I'm like, okay, all right. I'm just gonna say I'm bearish, right? I'm just gonna think I'm bearish. I can literally put in like a order right now, and this is gonna use fake money. It's not gonna use real money. I'm gonna buy it. It says I'm filled. I could go to monitor, right? And it doesn't show it right now, but it will show that I have a position in Tesla. And I can actually watch and view how this thing moves throughout the day to see if what I was looking at was correct or not. So that's another amazing way you can actually backtest anything. Is you get thinkorswim, you download the app that's completely free to download. All I think they would require you to do is put $50 into your thinkorswim account, and then you could use the desktop platform, go to the on-demand feature, and actually go in time for any single stock and view the option chain at that precise time. And you could actually trade and figure out, if your strategies work or not. And then you could tie in what JP was saying about the notebook and writing it down. So I hope that helps out. But all right, I think
It really has been an, I hate to say it, it really has been an EMA market the
But
past couple of weeks.
by the way, we're up
It's
on the
just
fake puts we got. But yeah, go ahead.
it's just been an EMA market. It's just been a trend continuation. Like, it doesn't matter what setup you have. It could be an 8 13 21 48 200 9 9 21 50 200. Like, once you get that confirmation on that 8 13 21 cross on a 5 minute and you hold that 50, it's just a straight shot. It's the market really is trading really, really clean whenever it catches a bid. It's so weird. Like right now, just look at NQ. Like, if you can, look at the chart. It's a straight shot to the top. It's just ridiculous.
I'm a retard. I bought Google puts instead of Tesla puts.
Good job.
Yeah, so I mean, yeah, you guys get the point of what JP was saying about the email thing, but
I mean, it really is a trending market. It's just, I mean, look at this breakout that we had at right now. For example, when the futures opened at 6 o'clock, it's just sick. We're up what 100, almost 100 points on Nasdaq, 75 points on Nasdaq. That's incredible. and it's respecting the pivot structure so well too. Oh my god.
Look at that. No other platform allows you to do that. Pretty sick. Pretty freaking sick.
Pretty sick.
Yep.
I'm over here like trying to adjust things, and you're over there trying to back test
Yeah, this is
whatever you
honestly
want.
the best tool I think you could. That this is what I used to backtest a lot of things. So definitely keep an eye on this. If you guys listened to it, hopefully you did. I think it's one of the best platforms you could get. And this is one of the biggest reasons. Very powerful. Um, but yeah, with that, I think we're gonna call it wraps. It's 9:14, so I'm gonna go eat dinner and go to sleep. It's been a pleasure talking to you guys. Thank you again, JP, for coming on and talking.
Yeah, I'm just gonna hang out here and just adjust some stuff, to be honest.
All right. Well, I will see you guys later.